On December 6th, 2025, the financial world saw something it had never seen before. Silver, that boring, overlooked metal, blasted past $59 per ounce, the highest price in recorded history. But while mainstream investors were distracted by stocks, crypto, politics, one institution wasn't distracted at all. Because as silver went vertical, something massive happened behind the scenes. JPMorgan quietly moved more than 169 million ounces into its vaults, and that's nearly 9% of the world's available supply, shifted into the hands of a single US megabank. And here's the part that sent chills down my spine. They have been accumulating this metal every single year since 2011. Silently, methodically, relentlessly. So I had to ask myself a simple question. Why would the world's most powerful bank hoard a metal everyone else says? Doesn't it matter? That question sent me down a rabbit hole that led to one conclusion. Something big is unfolding. Something that fits a pattern that has appeared before every major financial upheaval in modern history. A pattern that always includes artificial price suppression, runaway industrial demand, a widening gap between paper and physical markets, and finally, a violent explosion in price. This pattern appears in 4 stages, and according to everything I've analyzed, we have entered stage 4 right now. This is the story behind the silver tsunami, why banks, nations, and billionaires are loading up, why supply is evaporating, and why the next 6 to 12 months could reshape global finance. This is not financial advice. This is the truth the industry doesn't want anyone talking about. Let's begin. Section 1. The setup. How the silver market was engineered. Every financial crisis begins the same way. Not with chaos, but with calm created by institutions. Calm that hides fragility, calm that blinds investors. For silver, this engineered calm began in 1980, right after the Hunt brothers tried to corner the market. Regulators panicked, banks panicked, and suddenly rules were rewritten to make sure silver could never become too powerful again. What they built next was extraordinary. A paper market so massive, so inflated, and so disconnected from physical metal that analysts today estimate the ratio of paper silver to real silver at 50 to 1, 50 ounces promised, for every 1 ounce that actually exists. It gets worse. According to official COMEX reports, open interest now sits at 244% of deliverable silver, which means if even a fraction of futures holders demanded real metal, the system breaks. But here's the part few people know. This paper structure wasn't an accident. It was a long-term strategy to keep silver prices suppressed. Because silver is more than just a metal. It's a monetary asset, a critical industrial metal, a hedge against inflation and historically tied to the value of gold. If silver were allowed to rise naturally, it would expose inflation, weaken the dollar, and signal distrust in the financial system. Banks couldn't allow that, so for decades, silver stayed in a cage. But here's the thing about cages. Eventually, they crack. Section 2, the expansion. The part nobody noticed. Silver demand quietly exploded. Well, while the price stayed artificially low, the real world changed, and silver, quietly, became one of the most essential industrial metals on Earth. Solar panels, electric vehicles, 5G towers, semiconductors, medical equipment, AI data centers. Industry data now shows industrial demand makes up 59% of all silver consumption, up from just 40% a decade ago. Meanwhile, silver mine production is down 7% since 2016. Global supply has been in structural deficit for 7 straight years. Above-ground stockpiles are drying up. India is buying record amounts. China is quietly absorbing whatever the West sells. And through all this, silver stayed stuck under $30 for nearly a decade. That's not natural price action. That's not supply and demand. That's control. But eventually, even controlled systems hit their limit. And around 2011, the world's most powerful bank appeared to realize what was coming. This is where JPMorgan enters our story. Section 3, the JPMorgan accumulation. The biggest silver grab in modern history. Most people don't realize this, but when JPMorgan acquired Bear Stearns in 2008, they inherited huge short positions in silver. Positions that were losing money, positions that placed them on the wrong side of the trade. And then something happened. Around 2011, industry analysts noticed something strange. JPMorgan began buying physical silver. A lot of it. Every year, quietly, consistently. Today, estimates suggest they control 169 million ounces. In COMEX vaults, 675 million ounces total accumulation. Since 2011, approximately 45% of all above-ground silver in 1,000 OZ bars. This is more than the Hunt brothers, more than Berkshire Hathaway ever held, more than many nations. 2010, JPMorgan pays a fine related to metals trading. 2011-2020, they accumulate physical silver while the price is suppressed. 2020-2024, industrial demand explodes. 2025, they pull metal from registered to eligible, taking supply off the market. December 6th, 2025, silver hits $59. JP Morgan is holding one of the largest physical silver hoards ever assembled. What do they know? Because nobody accumulates 500 million ounces of silver by accident. Section 4, the break. The moment the paper market begins to fail. Every suppressed market eventually hits a stress point, and in 2025, silver's stress point arrived. On November 28th, the CME Group, home of silver futures trading, went offline for more than 10 hours. A server cooling issue, they said. During that outage, and the physical market became unhinged. Days later, JP Morgan reclassified 13.4 million ounces of registered silver into eligible, instantly removing it from deliverable supply. Why would they pull metal off the table at that exact moment? Simple. Lease rates hit 30%, meaning people were desperate to borrow physical silver at any cost. This wasn't normal volatility, and it set the stage for the final phase. Section 5, the eruption. Every silver shock in history ends the same way. We need to revisit the past. The Hunt brothers, two Texas billionaires, saw inflation, falling supply, and rising industrial demand. They did what any rational investor would do. They bought silver, a lot of it. They changed the rules overnight, banning new long positions. Silver collapsed. The shortage was real. The fundamentals are far, far worse. COMEX inventories are draining, and a megabank is quietly cornering physical supply the right way. This time, the buyers aren't rogue billionaires. This time, the buyers control the plumbing of the financial system, the same system that halted the Hunts. Section 6, the Federal Reserve and the spark. What happens in the next few days may determine the next few years. The Federal Reserve meets on December 9th and 10th. Market probability of a rate cut. Rate cuts weaken the dollar, and when the dollar weakens, silver and gold historically explode. Gold is already over $4,200 per ounce. Analysts project $4,500 to $5,000 next year. Silver always plays follow the leader, but silver moves faster and harder because silver is gold with rocket fuel strapped to it. The Fed meeting may be the spark, but the fuel? That's everything else. Endless money printing, this isn't coincidence, and convergence always leads to one thing, eruption. Section 7, the forecast. Where silver could go next. Most analysts play it safe, $75, $90, maybe $120, but that assumes the paper market survives. If it doesn't, if we see ratio reversion, if physical supply runs out, if investors demand real metal, if the dollar weakens faster than expected, then the historical inflation-adjusted peak of $170 doesn't look crazy. The gold-silver ratio correcting to its historic range of 15.1, that's $280 silver. Do we need a conspiracy? No. All we need is math. Section 8, the timeline that terrifies me. Why the next year may rewrite silver history. Here's what keeps me up at night. Registered COMEX silver is now around 113 million ounces. At recent drain rates, that hits dangerous levels within 6 to 12 months. Industrial demand keeps rising. Above-ground stockpiles continue to fall. Banks are hoarding. Premiums are increasing. Dealers are reporting delays. And the public still has no idea what's happening. Silver is not just a metal, it's a pressure valve, a signal of monetary stress, a canary in the coal mine of global finance. And that canary is screaming. Section 9, the final warning. The window is closing. I'm not a financial advisor. This is not financial advice. This is pattern recognition. Stage 1, engineered calm. Stage 2, distorted expansion. Stage 3, the break. Stage 4, eruption. We are no longer waiting for the silver tsunami. We are living in it. The only difference between people who benefit and people who get blindsided is timing. And in my opinion, the window to prepare is shrinking faster than anyone realizes. December 9th, the Fed meeting, maybe the first domino. The rest, we'll watch unfold in real time. The truth is, we are standing on the edge of something massive, something historic, something most people won't recognize until it's already too late. Silver isn't just a metal anymore. It's a pressure valve, and the global financial system is leaning on it harder every single day. JP Morgan knows it. The insiders know it. Industrial buyers know it. And now, you know it too. We are watching a once-in-a-generation shift play out in real time. A shift that will rewrite markets, rewrite history, and maybe even rewrite wealth itself. So if you want real updates, not the headlines, not the noise, but the actual signals that matter, then make sure you subscribe. because I'll be tracking this story day by day, move by move, as the cracks widen and the pressure builds. And now the question that only you can answer. Do you think silver hits $100 next year, or even higher? Drop your take in the comments, not just a guess, but your reasoning, because this community is smarter than Wall Street gives it credit for. And I genuinely want to hear what you see coming. Remember, this isn't fear-mongering, this isn't hype, this is pattern recognition. This is history playing out again, almost line for line, just bigger, faster, louder. The silver tsunami is rising. The countdown has already begun, and what happens next could be the most important financial event of 2025. Stay aware, stay prepared, and stay tuned, because this story is only just beginning.